It doubled. 4, 2, 8. That's 100% increase. Simple, right? That's growth. It doubled. Or did it? Double what? Let's slow down. 4% to 8%. That's a 4-point increase. And yes, technically, it doubled. Why does this feel big? Because your brain locks onto one thing. The number, 100%, but it ignores something quieter. The starting point. Instead of saying, it doubled, say what actually happened. It increased by 4 percentage points. Same data, 4% to 8%. But now, we're going to look at it differently. Because how you frame growth changes how it feels. The numbers didn't change. 4 became 8, that's true. But the data didn't lie. Your perception shifted. Because you reacted to 100%, not to the base. Now look at these. Same pattern, 2 companies, both increased, but which one grew more? Don't answer yet. What are you comparing? Percentage? Absolute change? Starting size? Here are the actual numbers. Company A, 100 to 115. That's a 15 increase. Company B, 1000 to 1100. That's a 100 increase. Which one grew more, in absolute terms? Both companies grew 15%. Same percentage, different reality. Next time you hear, it doubled, ask 2 questions. What's the base? Absolute or relative? When we hear 100%, our brain jumps to magnitude, not context. The smaller the base, the bigger the illusion. This isn't just about doubling. It's about how the same number is framed. And that changes everything. Which product improved more? Take a second, don't answer too fast. Product A goes from 78 to 82. Product B goes from 88 to 92. Same increase, 4 points. But, is it really the same growth? Which one actually improved more? Let's slow down and calculate. Product A improved by 4 points, out of 78. That's about 5.1% growth. Product B also improved by 4, out of 88. That's about 4.5%. Same increase, not the same growth. Base size changes everything. When the base is small, the same increase looks bigger. When the base is large, the same increase looks smaller. Nothing changed, except the starting point. Same numbers, different story. Take a look at these 2 programs. Program X went from 5 to 10. Program Y went from 60 to 75. Which one improved more? Take a few seconds. Don't calculate yet, just feel it. The percentage shock. Program X doubled. That's a 100% increase. Program Y increased by only 25%. And yet, in absolute numbers, Program Y gained 15. Program X gained only 5. So what feels bigger, isn't always bigger. Here's what's interesting. Program X gained 5. Program Y gained 15. 3 times more in absolute terms. But Program X feels bigger. Why? When the starting number is small, even a small change looks dramatic. Going from 5 to 10 feels explosive. Because doubling feels powerful. But doubling a small number is still small. This is called the small base effect. In business, the right comparison is never automatic. It depends entirely on the decision you're trying to make. If your goal is scale, real, tangible scale, then absolute change matters more. 15 more users, 15 more customers, 15 more units sold, that has real weight. It affects revenue. It affects resources. It affects impact. 5 may sound dramatic if it doubled. But 5 is still 5. On the other hand, if you're evaluating momentum, if you're testing an idea, a marketing channel, or a new product, then percentage might tell a different story. Going from 5 to 10 suggests acceleration. It suggests something is catching on. It suggests potential, but potential and scale are not the same thing. Here's the discipline. Percentage describes speed. Absolute change describes magnitude. If you confuse speed for magnitude, you risk overreacting. If you ignore speed entirely, you might miss early signals. So before reacting to a chart, pause and ask yourself, am I evaluating speed or impact? Now let's look at the same principle in a different form. This time, not with raw numbers, but with a graph. At first glance, which company seems to improve faster? Most people instinctively point to the steeper line. Our brains are extremely sensitive to slope. When a line rises sharply, it feels like acceleration. It feels energetic. It feels powerful. But slope doesn't exist on its own. Slope is a function of scale. The vertical axis determines how dramatic something appears. The starting point determines how steep a change looks. A company that starts low can look explosive. A company that starts high can look stable, even if the actual change is larger. Your brain interprets visual steepness as speed, but speed in a graph can be exaggerated simply by compressing the base range. So ask yourself, are you reacting to the data, or reacting to the angle? The graph itself isn't lying. The numbers haven't changed. What changes is your perception. When you see a steep line, your brain reads urgency. When you see a gradual line, your brain reads stability. But both judgments depend entirely on how the axes are scaled. If the vertical range is narrow, small movements look dramatic. If the vertical range is wide, even large movements can look insignificant. This is why two charts of the same data can tell two completely different emotional stories. And that emotional reaction often happens before conscious calculation ever begins. The danger isn't in the numbers. The danger is in trusting your first visual impression. Because your brain is optimized for pattern recognition, not precision measurement. Percentage without context is incomplete, and a graph without scale can quietly mislead you. In isolation, numbers feel authoritative, lines feel objective, percentages feel precise, but precision without context can distort judgment. A percentage tells you how fast something changes, but not how large that change actually is. A graph shows you direction, but the axis determines the emotional intensity of that direction. When the base is small, growth feels explosive. When the base is large, the same growth feels ordinary. When the vertical range is compressed, volatility feels dramatic. When it is expanded, even major shifts appear calm. None of this is deception by default, but it is fertile ground for misinterpretation. So build the habit. Before reacting to a percentage, check the base. Before trusting a graph, check the scale. Take a careful look. Market A grows from 4 to 8. Market B grows from 40 to 44. Which one grew more? Don't rush. Think about two things: absolute change and relative change. Market A doubled. Market B only grew by 10%. That sounds dramatic, doesn't it? But both increased by 4 units. Same absolute growth, very different percentage growth. So what matters more? It depends on context. If you're choosing where to invest large capital, size might matter more. If you're looking for emerging markets, percentage momentum might matter more. The data hasn't changed, your interpretation has. Percent is powerful, base is grounding. Use both. A bigger percentage doesn't automatically mean a bigger improvement. Without the base, percentage can mislead you. Before reacting to dramatic growth, ask one more question. What was the starting size? Because in data, context isn't optional. It's everything. Before you react to a percentage, pause. Ask 3 questions. What was the base? What is the absolute change? And what decision am I making? Because percentage tells you speed. Base size tells you scale. If you remember that, you won't get fooled by big numbers anymore.